So, hello, Strategic Alpha community members. I welcome you to yet another super interesting session. And today we will be learning a unique concept, and the concept which will help you make super normal profits with ultra low risk. So, we'll be discussing the theme investing in holding companies, Decoded. I'll be sharing all the secrets of investing in holding companies and how do smart investors, base investors really make money from these kind of themes. So we'll be discussing about that. So let me just share that whatever we'll be discussing today, it is purely for educational purpose. Do not take this as a recommendation, and take your own decisions whenever you are making some investment decision. So this should be purely taken for educational purpose. Now let us move forward. Moving forward, let us understand what are holding companies. Holding companies are the companies which holds stakes in their group companies, or they might have invested in the other listed entities, and that is the reason why it is called as holding companies. And did you know that the biggest holding company of a world, Berkshire Hathaway, is the largest holding company in the world. So it is a holding company which holds stake in many other companies like Apple is their largest investment, close to 100 plus $1 billion of worth in Apple Inc. And it holds other companies also like American Express, Coca-Cola, and all those. So it is a holding company. So usually what is the case with holding companies is that if you see that all the global holding companies, usually the discount of holding companies lies between 50 to 20%. When I'm saying about discount, what I am saying that the total valuation of the holding company is less than the sum of the parts of whatever it holds. So why it happens is because this will be fully valued only and only when they sell all those shares. Unless and until they sell those shares, they will be always trading at a discount, because investors might not be knowing, there might be a lot of uncertainty when they will sell and all those that. And that is the reason why holding companies usually trade at a discount in between 5 to 20% globally. And Berkshire Hathaway, as you some of you have rightly pointed out, Berkshire Hathaway is the largest holding company in the world. But one more fact which I would like to share is India is unique, where holding company discount ranges from 50 to 80%, and average being 65%. So Indian holding companies, and why does that happen? Because there is a perception, and yes, it is true that compared to US companies, Indian companies are not that professionally managed, and there is a lot of uncertainty with the holding companies when they will sell. Will be passing all the benefits of that holding company to the shareholders of holding company or not? And because of that uncertainty, India is a unique place where the discounts are huge compared to the global peers. So if you see the history of past 20 years, and if you just take out the data, and this is what I've done, usually the holding company during the bear phase of the market, it might trade at 80 up to 80% discount, and during the bull markets they might trade at a discount of 50%, so average being 65%. And why we are talking about this theme, holding companies, why one must focus on holding companies? Just look at this data, you'll be able to understand. Of course, it is because of money which we are going to make. So let us just look at the holding companies and their respective subsidiaries or the investing companies, their returns compared with the holding company. Like Britannia, the FMCG company, in the 2012 to 2018 period, Britannia gave 1,250% returns. And at the same time, its holding company, the parent company, BBTC. BBTC is the parent company of Britannia because BBTC holds 50.6% stake in Britannia through its subsidiary. So at the same time, when Britannia gave 1,250% return, BBTC gave 1,950% return during the same period from 2012 to 2018. Bharat Forge is one more investing company of the holding company Kalyani Invest. When Bharat Forge gave 500% return, Kalyani Investment gave 680% return. When SRF gave 920% company, its parent, which holds the stake in SRF, which is Kama Holdings, it gave 1000% return. UPL, which gave 550% return, Unifos Enterprises, the holding company which holds the stake in UPL, at the same time gave 650% return. So from this data, it is clearly evident that it is much beneficial to hold a holding company when they are at a deep discount. Because if you are bullish on Britannia, it makes sense for you to buy BBTC because on the downside, you'll get the same downsides. In fact, you'll be more protected in the holding company because as it is already trading at a discount. But on the higher side, it will give more returns than the underlying investment. So this is the reason why we are studying this case today, why we are studying this holding company theme today. So it's like, as I always say, that holding company is like Dravid on the downside and Sehwag on the upside. Investing in holding companies is like when it goes down, it will be like Dravid, dependable. And on the upside, it will be like Sehwag. During the slog overs, it will give tremendous returns. Same phenomenon is seen in holding companies. Now let us go and understand why we are studying this theme. So Kalyani Investment, if you see Kalyani Investment 2012 or 2013 to 2016, during that period, it went up 10x in 3 years. It went up 10x in 3 years. BBTC also during the same period, it went up 20x in 4 years from 2013 to 2014 to 2018. So if you are able to time it better, just at the time of reversal, you might get 10-year return in 3 4 years. That is the possibility with holding companies. And if you look at, if someone is buy and hold kind of investor, even for him, like even if he is like buy and forget kind of investor where he is not looking at the investment, even in long run he has created wealth. Like Kalyani Investment, if somebody would have bought at 2014, and even if he is holding today, he is still sitting at 3x return in 8 years, which is a decent return for a passive investor. BBTC in 8 years it has given 10x return. But for a stock picker, because to create alpha, one needs to be a stock picker. For a stock picker, it becomes buy low and sell high. For buy and forget investor, it becomes buy and hold. So it depends upon the skill, and depending upon that, the various other investors might get different return. So these are two examples of holding companies which gave a return. I'll be talking about one more holding company also at a later stage. Now let us understand what are the types of holding companies. First is holding company with its along with its own business. There is a business like BBTC. BBTC is into in its own business also. Tree plant means tea plantation and coffee and all. Along with that, it also holds a stake in Britannia. So holding company along with its own business and which has stakes in group companies and it has its own standalone business. There is one more type which is pure holding companies, and this is what should be preferred because the business which has holding company which has its own business, rather than that, I would prefer in investing in company which is a pure holding company. We'll be talking about the reasons for that at a later stage. Let us go forward and understand. So pure holding companies and holding company along with its own business. So these are all the holding companies which are listed today. There are few more, 3 4 more, but I thought that this list of 14 is enough for you to learn. So these are the holding companies. BBTC owns Britannia Industries, Bombay Dyeing, and Go Air. It is trading at 85% discount to its valuations. So it holds 50.6% stake in Britannia, which is valued at around 42,000 crore. Bombay Dyeing and Go Air put together, BBTC's valuation is trading at 85% discount to the holding value which it holds. Kalyani Investments, it holds stake in BF Utility, Bharat Forge and Hikal. Balmer Rory holds stake in Balmer Rory. Tata Investment holds stake in Titan, Tata Consumer, Trent, Voltas, TCS, HDFC Bank. HDFC Limited holds stake in HDFC Bank, HDFC AMC, HDFC Life, and Bandhan Bank. Maharashtra Scooters owns stake in Bajaj Finance, Bajaj Finserv, Bajaj Auto, and Bajaj Holdings. Bengal and Assam holds stake in JK Cement, JK Lakshmi Cement, JK Tire, JK Fenner, and JK Paper. JSW Holdings holds stake in JSW Steel, Jindal Stainless, and JSL Hisar. Kama Holdings holds stake in SRF. Bajaj Holdings holds stake in Bajaj Auto, Bajaj Finserv, Maharashtra Scooters. Equitas Holdings holds stake in Equitas Small Finance Bank. Rani Holdings holds stake in Rane Madras, Rane Engine Valve, Rane Brake Lining. Sundaram Finance Holding holds stake in Sundaram Clayton, Wheels India, Impal, Brakes India. And there are some more other companies which are not listed. They are private limited companies as of now. And Kalyani Investment, which holds stake in all the Birla Group companies, some of the Birla Group companies, Ultratech Cement, Grasim, Aditya Birla Capital, Century Fashion, Century Textile, Hindalco, Idea, Kesoram, and ABFRL. So these are all the holding companies. Whenever you are studying about the holding company theme, this is the watch list which comes on your radar, and you must study further. And I've done that study myself, and I've picked only two of these all holding companies, and I will be talking about those two and why I have chosen those two companies. Let us understand how investing in holding companies will benefit the shareholders of that holding company. So let us say if there is an investing company which has a market cap of 10,000 crore, and there is a holding company which owns stake in this investing company, and let us assume that holding company is holding 100% share of this company. Let us just assume, and if it is trading at 90% discount, if it is trading at 90% discount, the holding company valuation will be at 1,000 crore. So investing company's valuation 10,000. If it is trading at 90% discount, the holding company market cap will be at 1,000 crore. Let us say after you studied this investing company and you came to know that in 3 years, this stock can go from 100 to 150, something like a 10,000 crore market cap company can become a 15,000 crore market cap company. And you studied that, and you have that understanding that ये 3 साल में 50% return देगा ही देगा. So at that point of time, you invested in this company at 90% discount because you invested it when it was 10,000 crore market cap or 10,000 crore valuation. So you invested here in this holding company at 1,000 crore market cap. And let us say, as I say, that the discount between the holding companies ranges between 50% to 80%. And in this case, it was close to 90%. And just because as I said, the discount varies whether you are in a bull market or a bear market. During the bear market, you might get a big discount, or because the stock is not found by many, or because the whole holding company theme is out of favor. At that point of time also, you might get it at a discount. So let us say if just the discount narrows down from 90% to 80% because of a market moving from bear market to bull market or a normal market, something like that, and because of that, the holding company discount reduces, and more and more people have found this theme interesting and started investing in that, and the stock started going up, and the holding discount narrowed. At that point of time, what will happen if this company goes down by 10% discount? Let us say 15,000 crore market cap. If the stock goes up 50%, 15,000 crore market cap, and at a 80% discount, just do a calculation of 20% at what market cap it will trade. So for 15,000 crore market cap, if you just do a calculation of 20%, it will be trading at a market cap of 3,000 crore. So at the same time, when investing company went up 50%, during the same time, holding company will go up 3x. So that is the advantage of investing in a holding company. And that's why I say this is how the shareholder of that holding company will be getting benefited indirectly by getting more returns. He has taken, on the downside, he has taken the same risk. On the downside, he has taken the same risk as investing company, but on the upside, he has made much more than the investing company. So hope you have got this concept. Everyone got this concept, how you can benefit from the holding company by when the discount just get narrowed. So this, and as I say, this gives you an answer why I say that on the downside it is like Dravid, on the upside it is like Sehwag. Now let us understand why holding companies trade at a discount to NAV. See, whenever a company holds some shares of other company into the parent company, which is a holding company, there is an impact of taxes paid on dividend income. There is a leakage of value, and just because once that holding company receives the dividend from other company, today dividend has to be taxed in the hands of investors. So company has to pay that dividend, and out of that, once again, when the holding company gives out dividend, that amount will come back to the shareholder of that holding company. And that shareholder, once again, when he receives dividend, he will be paying tax on that dividend as per the tax bracket. So there is a double taxation, and because of that, there is a leakage of value, and that is the reason why holding companies usually trade at a discount, because people will all discount it that way. Because there is a leakage, holding company will not get the whole value which it holds in the subsidiary companies. One more reason is some of the companies, what they do is, if they own some shares in other companies and if they are getting some dividend, they might do poor capital allocation. Whenever they receive that money, and what do they do that money, means उस पैसे के साथ वो क्या करते हैं, it is very much important. वो अगर poor capital allocation हुआ, so it is a waste of money, and there is a fear about that, and that is the reason why usually holding companies trade at a discount to NAV. There is one company which is called as Nalwa Sons Investment. जब कभी भी उस कंपनी को डिविडेंड मिलता है, वो डिविडेंड डिस्ट्रीब्यूट नहीं करता है शेयरहोल्डर के साथ, और वो डिविडेंड अपने रिलेटेड पार्टी में एज अ लोन दे देता है, which means that shareholders doesn't get anything. So there is a poor capital allocation, or they might invest into something, कोई real estate buy कर लिया, ऐसे कुछ किया, तो there is a fear of poor capital allocation, and that is the reason why they trade at a discount to NAV. Once again, there is an indirect control. The shareholder of holding company is not directly owning the investing company. He is indirectly owning that stake, and there is a reason, and there might be lot of uncertainties कि जब कभी भी वो stake बिकेगा, शायद वो पैसा siphon out किया जाए. So there is a reason, and there might be a case. So इसके लिए usually investors वो buy करते ही उसको discount कर लेते हैं, और that is the reason why it starts trading at a discount. क्योंकि market is a collective wisdom. बहुत लोग ऐसा सोचते हैं, इसकी वजह से वो उसको बड़ा वैल्यू नहीं दे पाते हैं, बिकॉज वैल्यू कैसे मिलता है कोई भी शेयर को, पीपल क्रिएट वैल्यू इन दैट शेयर, एंड पीपल इफ दे आर सीइंग दैट देयर माइट बी सम अनसर्टेनिटी, देयर इज नॉट अ रिस्क, इट्स अ अनसर्टेनिटी. जब होगा तब रिस्क होगा, तो जब तक नहीं होगा तब तक वो अनसर्टेनिटी है, तो जब तक नहीं होगा तब तक अनसर्टेनिटी है. इसीलिए यूजुअली दे ट्रेड एट अ डिस्काउंट टू एनएवी. there might be leakages at the holding company due to expenses, क्योंकि होल्डिंग कंपनी भी उसको पूरा मतलब अकाउंटिंग एक्सपेंस होगा, बहुत सारा एक्सपेंसेस होगा, एंड देयर माइट बी लीकेजेस, एंड ये सब चीजों के हिसाब से इफ यू जस्ट एड अप दिस ऑल, taxes paid, poor capital allocation, indirect control, and leakages due to expenses at holding company, this is the reason why the holding companies trade at a discount to its net asset value. Now, what is important while selecting the holding company for investment? See, discount is secondary. Just because there is a discount, you cannot buy that company, because discount tells you that there is a margin of safety, there is a deep value in that, but discount doesn't mean anything. आपको अगर वो होल्डिंग कंपनी बाय करनी है, तो सबसे इंपॉर्टेंट, डिस्काउंट तो इंपॉर्टेंट है बट दैट इज सेकेंडरी. व्हाट इज प्राइमरी? द क्वालिटी ऑफ होल्डिंग विच इट ओन्स. क्योंकि आप सिर्फ डिस्काउंट है इसलिए बाय करेंगे तो दैट माइट प्रूव टू बी अ वैल्यू ट्रैप. बहुत सालों तक वो डिस्काउंट कभी नैरो डाउन ना हो, दैट माइट बी द केस. तो कोई भी डिस्काउंट नैरो डाउन होने के लिए ड्यूरिंग द बुल मार्केट, व्हाट हैपेंस इज, व्हाट इज इंपॉर्टेंट इज वो कंपनी ने किस कंपनी में इन्वेस्ट किया है. यू शुड बी बुलिश ऑन दैट. और वो बिजनेस अच्छा होना चाहिए. जब तक वो बिजनेस अच्छा है और आप भी बुलिश हो उसके प्रोस्पेक्ट्स को लेके, then that discount makes sense. And that is the reason why I say discount is secondary. The quality of holdings and betting on that investing company and being bullish on that, that is more important. So quality of holdings is primary, discount is secondary. And we should prefer the holding companies which give good dividend yield than the underlying. Like there is a case like Tata Investment Corporation. कोई भी टाटा मोटर्स आप देख लीजिए, टाटा स्टील ले लीजिए, वो होल्डिंग कंपनी के हिसाब से जो स्टेक है उसके हिसाब से आपने सबका वेटेड एवरेज निकाला है डिविडेंड यील्ड का. तो वेटेड एवरेज ऑफ दैट डिविडेंड यील्ड फॉर द इन्वेस्टिंग कंपनीज माइट बी अराउंड 1.5%, मगर वो होल्डिंग कंपनी थ्रू आपको 2.5% मिल रहा था एंड इन्वेस्टिंग इन द सेम टाटा ग्रुप ऑफ कंपनीज. तो it is when there is a big discount in valuation of Tata Investment Corporation and there is a good dividend yield also, it makes sense to go with dividend yield plus holding company. अगर नहीं मिल रहा है तो उसके लिए ये नहीं करना है. We have to look at the other options, but it is preferred, the most preferred way to hold a holding company is with good dividend yield. Prefer to invest at peak discounts. Unlike, as I say, I have said it in multiple times, never ever average on the downside. Magar this case is completely different than other companies. In holding companies, this is the only thing where averaging on the downside makes sense. कोई भी कंपनी में averaging on the downside doesn't make sense. The reason for that is कि कोई तो रीजन है, बिकॉज ऑफ दैट द स्टॉक इज कमिंग डाउन. इफ द मार्केट इज नॉट कमिंग डाउन एंड द स्टॉक इज कमिंग डाउन, इट मीन्स दैट देयर इज समथिंग रॉन्ग विद दैट कंपनी. बट इन होल्डिंग कंपनीज, मार्केट डाउन की वजह से अगर आपको पीक डिस्काउंट मिले, दिस इज अ थीम विच यू शुड प्रिफर एवरेजिंग ऑन द डाउन साइड. क्योंकि जितना आप ज्यादा डिस्काउंट लेंगे उतना बड़ा आपका मार्जिन ऑफ सेफ्टी होगा. सो प्रिफर टू इन्वेस्ट एट पीक डिस्काउंट्स. प्रिफर कंपनीज विद शेयर होल्डर इंटरेस्ट अलाइन विद द प्रोमोटर्स. सी, कोई भी होल्डिंग कंपनी में आगे जाके वैल्यू अनलॉकिंग का इवेंट कब हो सकता है? जब उसका प्रोमोटर उस होल्डिंग कंपनी का इंटरेस्टेड हो. एंड व्हेन ही विल बी इंटरेस्टेड, व्हेन द प्रोमोटर होल्डिंग इज हाई. देयर आर मेनी कंपनीज विद होल्डिंग कंपनीज विद शेयर होल्डिंग एज लो एज 40 and 50%. उसका कभी मन ही नहीं करेगा. अगर उसको पूरा कंपनी एक्वायर करना है या आप उनको डीलिस्ट कर रहा है वो कंपनी और सबको शेयर होल्डर को पे आउट करना है, तो या कोई डिविडेंड भी देना है, बिकॉज द कंपनीज विच हैव 75% प्रोमोटर होल्डिंग, वो अगर डिविडेंड दिया है तो प्रोमोटर के पास सबसे ज्यादा पैसा आएगा. तो प्रोमोटर्स इंटरेस्ट शुड बी अलाइंड विद द शेयर होल्डर्स इंटरेस्ट. तो इट मेक्स सेंस कि आप हाई शेयर होल्डिंग पैटर्न वाले होल्डिंग कंपनी चूज करें, बिकॉज दैट इज व्हेन द शेयर होल्डर्स इंटरेस्ट आर अलाइंड विद द प्रोमोटर्स इंटरेस्ट. सो हियर द शेयर होल्डर इंटरेस्ट आर अलाइंड विद द प्रोमोटर्स. बिकॉज अभी फॉर एग्जांपल बीबीटीसी 150 साल पुरानी कंपनी है एंड इट इज लाइक अ लीगेसी एसेट फॉर वाडिया फैमिली. इट इज ओन्ड बाय वाडिया फैमिली एंड इट इज लाइक अ लीगेसी एसेट. जब कभी ना कभी तो उनको मन होगा कि ये होल्डिंग कंपनी क्यों रखा है हमने, let us make that a private limited company and make it 100% owned company. At that point of time, they might bring a buyback, and at that point of time you might get a better value. Because जब कभी भी buyback लाएंगे, because अभी for example in case of Kalyani Investments, उसका बुक वैल्यू 15,000 रुपए के ऊपर है, 15,000 रुपीज के ऊपर बुक वैल्यू है. जब कभी भी बायबैक लेंगे, आज का मार्केट कैप 670-680 करोड़ का है, जब कभी भी बायबैक लाएंगे तो दे विल एटलीस्ट ब्रिंग एट अ मार्केट कैप ऑफ 3,000 करोड़ और 2,500 करोड़, क्योंकि उनको मालूम है इसका बुक वैल्यू कितना बड़ा है. एंड इन दैट केस जब 75% प्रोमोटर होल्डिंग है तो इट मेक्स सेंस और इट विल बी इजियर फॉर देम टू गो फॉर वॉलंटरी डीलिस्टिंग बाय परचेसिंग 100% शेयर ऑफ दैट कंपनी. तब के केस में आपको जैकपॉट लग सकता है. And that is the reason why we should invest in the companies which have highest shareholder, highest promoter holding. Prefer with non-operating holding companies. As I said that जो खुद का business है, it becomes too much complex. वो क्योंकि you may not be bullish on the main business of that company, but you might be bullish on indirect holdings. So in that case, I say that ऐसा कोई rule नहीं है, मगर prefer कि नॉन ऑपरेटिंग होल्डिंग कंपनीज में इन्वेस्ट करें. एंड वन मोर थिंग इज प्रिफर बिग ग्रुप्स, क्योंकि जो छोटे ग्रुप है दे माइट नेवर ब्रिंग दैट वैल्यू अनलॉकिंग, क्योंकि उनको उतना सेंस ही नहीं होगा छोटे जो ग्रुप है कि ये मेरे लिए कितना इंपॉर्टेंट है, एंड दे माइट नॉट बी इंटरेस्टेड इन दैट. मगर बड़े जो ग्रुप है, क्योंकि बड़ा ग्रुप है, जैसे फॉर एग्जांपल बीबीटीसी, उसका शेयर होल्डिंग जो ब्रिटानिया में है 41,000 करोड़ जो बीबीटीसी के थ्रू ओन करते हैं. तो देयर माइट एट सम पॉइंट ऑफ टाइम, बड़े ग्रुप का क्या होता है, दे अंडरस्टैंड दैट वेल, दे अंडरस्टैंड द वैल्यू ऑफ दैट बिजनेस, दे माइट गो फॉर दैट वैल्यू अनलॉकिंग. सो that is the reason why I prefer big groups. Now these are all the important points to consider while investing in a holding company, and if we do this, then our job is 95% done. 95% done. और सबसे इंपॉर्टेंट क्या है, कोई भी होल्डिंग कंपनी, एज आई सेड, डोंट जस्ट इन्वेस्ट जस्ट बिकॉज देयर इज अ बिग डिस्काउंट. इन्वेस्ट बिकॉज यू आर बुलिश ऑन द इन्वेस्टिंग कंपनीज. नहीं तो इट विल बी लाइक विदाउट ऑब्जेक्टिव इन्वेस्टमेंट, एंड विदाउट ऑब्जेक्टिव इन्वेस्टमेंट डजंट गिव एनी फ्रूटफुल रिटर्न्स. सो देयर इज अ रीजन. If you are investing in BBTC, you should be bullish on Britannia. If you are investing in Kalyani Investment, you should be bullish on Bharat Forge. Only and only then it makes sense to invest in Kalyani or BBTC. So let us understand the first case study, that is Kalyani Investments. I have picked 2 case studies out of all 14 companies because I have studied that other. You can go through that and you will see the criteria which I said कि promoter holding ज्यादा होना चाहिए, discount ज्यादा होना चाहिए, और आप bullish भी होना चाहिए. ये सब केस में 14 में मेरा दूसरा किसी से मैच नहीं हुआ, मगर सबसे ज्यादा जो मैच हुए वो 2 हुए, कल्याणी इन्वेस्टमेंट्स एंड बीबीटीसी, एंड विल बी टॉकिंग अबाउट दीस 2 केसेस. तो कल्याणी इन्वेस्टमेंट का करंट मार्केट कैप इज 740 करोड़, करंट प्राइस इज 1693 रुपीस. टोटल एसेट्स ऑफ दिस कंपनी इज 5466 करोड़, एंड बुक वैल्यू एज आई सेड अर्लियर 12,000 रुपए का बुक वैल्यू है, एंड current price is just 1693, and it's a debt free company. Holding value of quoted investments is around 5863 crore. Current discounts to its holding value is 87.3%. या आप बेयर मार्केट और बुल मार्केट और 20 साल का मतलब 10-12 साल का आप हिस्ट्री देखेंगे, दिस डिस्काउंट इज एट द पीक डिस्काउंट. 89% तक गया था पिछले 15 साल मतलब 10-12 साल में. सो वी आर near to that peak discount, 87.3%. It holds shares 3,86,67,375 shares of Ecal Limited. Current market price is, just check the current market price, it is not 133, I think it should be around 300. So as per that, because there is some mistake here, as per that 300 or something, current valuation is 1,248 crore. I have mistakenly not, these are the older prices when I wrote the blog on Kalyani Investment, but this calculation is as per the new price. So you just take a note here. So 3,86 lakh shares into today's current price, which will be around 1,248 crore valuation. Bharat Forge, it holds 6,33 lakh shares, and current CMP is around 700 plus, and current valuation is 4,374 crore. BF Utilities, it owns 61,95,000 shares. As per current CMP, the valuation comes to around 241 crore. So let us understand the case. What will happen if the discount narrows and the value increases, value of that investment increases just by 50%. I'm not even talking about big value increase in Bharat Forge. Means if I'm bullish on, because I'm bullish on Bharat Forge, and 3 साल में 50% रिटर्न इज नॉट अ बिग एक्सपेक्टेशन. 3 साल में 50% रिटर्न इज क्लोज टू 20% CAGR, 18 to 20% CAGR. That is not a big thing because it has already delivered that return in past 20 years. So with a reasonable expectation of 50%, please take it as a case study. I'm just trying to explain this case and don't take this as a recommendation. So I'm just expecting कि भारत फोर्ज पिछले अगले 3 साल में 50% से बढ़ जाता है. So in that case, what will happen? Current valuation of Bharat Forge is around 5,863 crore. And even if it rises by 50%, the valuation of that company will be 8,440 crore. So currently it is trading at 87% discount. And as I said, during the bull times, the discount might narrow to as low as 50%. So at that point of time, I'm not even expecting 50% discount. If that happens, that becomes a big bullish thing. But I'm just expecting कि ये discount narrow down होके 70% हो जाता है. So at 70% discount, at 8,440 crore market cap, means valuation, at 70% discount, the holding company ka valuation will be at 3,000 crore, which is 3.4x from here. And I'm not even talking about big numbers. I'm just talking about 50% return in Bharat Forge. And I'm not even taking into consideration ICAL and BF utilities. So if that happens, for 50% rise in holdings will lead to 3.4x returns for Kalyani Investments in next 3 years. So second case is BBTC. Second case study is BBTC. Current market cap of this company is 6,355 crore. Current price is 911. It has a cash and cash equivalents of 4,567 crore and against a debt of around 5,000 crore. It has a standalone debt of 5,000 crore. So it is like a debt-free company because it also has a cash and cash equivalents of 4,500 crore. Debt to equity is 1:1.07. Promoter holding is 65.9%. So mistakenly I said that is 75%. It is 65.9% in case of BBTC. Still it is good. BBTC, the total holding value of BBTC, the shares which it holds of 50.6% in Britannia, hold shares in Go Airlines, 39.7% in Bombay Dyeing, and its own tree plantation, healthcare and electromags and all those businesses. So total holding, I'm not even taking this tea operations and all, plantation and all. I'm just adding these three. Total holding value is 42,000 crore. And current market cap is 6,355 crore. Current discount is 85%. And let us understand what will happen if the discount narrows and value increases by 50% in next 3 years. So expecting Britannia to give 50% return in next 3 years, it is not a big expectation because it has already given 20% plus return on a compounding basis for the past many years. So it is not a big thing to expect that in 3 years, 50% in Britannia is not a big expectation. If that happens, value of this 42,000 crore will go up to 63,500 crores. And if there is a bull market, if this discount narrows down from 85% to 70%, this 63,000 crore market valuation will lead to the holding value, means the value of this company or the market cap of this company trading at 18,500 crore, 18,500 crores, and return a 50% rise in holding value will give rise to 3x multibagger in BBTC. So hope you have got this concept and understood this concept, both these case studies. Why I choose Kalyani and BBTC? Because they have created long-term wealth. If you just see the chart of 20 years or 10 years, 15 years on a longer term horizon, both these stocks have created wealth for the shareholders. Unlike there is one company which you should avoid, such companies is the third case study. As I said, what is that you should prefer and what is that which you should not prefer? I will not prefer the companies like Nalwa Sons Investments. Let me just share why I say that. So Nalwa Sons also trades at a significant discount to its NAV. However, the Nalwa Sons, the dividend income which they get, which it received, it gives out to loans to related parties, which means that they don't pass on the benefit of that holding to the shareholders of that holding company in Nalwa Sons. So even the shareholding pattern is not encouraging. If you see the shareholding pattern, it must be around 50% and not in line with the shareholders' interest. So in this situation, it won't be creating long-term wealth. Yes, there might be trading if somebody, it is like this return is speculative return, whatever you are saying here, or this is a speculative return. But we want a company which should be, if you time it better, you can make super normal profits in short run, like 3 years or something like that. If we even don't time it better, still on a longer horizon, it should be a wealth creator. And the Nalwa Sons investment doesn't qualify in that. And if you just see how share prices has reacted, just see past many years, there has been no return. From 2008 to 2020 to 12 years, there has been no return. And see, usually I prefer such companies which are one of the hated stock. This is one of the hated stock, but hated doesn't mean anything because hated to hai, but they are doing these things because of which I would not prefer to choose this company. I would prefer to choose the company which has not given return for 8 years, but management is doing everything in the right direction. I would prefer to choose that company. Kalyani ने भी 8 साल पिछले 8 साल में रिटर्न नहीं दिया है, बट वहां केस अलग है. So it is a hated stock plus promoter holding or promoter is taking every step in the right direction. So hope you have understood all the cases of whatever we have discussed. So what is my take on holding companies? So holding companies are the safe bets, especially during the uncertain period, like war period, during or all those things when the markets are super uncertain. At that point of time, holding companies are safe bets. As I said, it is like Dravid on the upside, downside, and Sevag on the upside, thus giving us the needed low risk, high return framework. Out of all the holding companies, BBTC and Kalyani are the deep value bets, discounts ranging from 85 to 88%. Such discounts to valuation give me enough margin of safety to withstand any volatility during such times where there are fears of recession and fears of hyperinflation. Then these become safe bets. Betting on BBTC means bet on Britannia, and Britannia is one such business which is least affected by the recession. More the fears of recession, more money will be flowing towards Britannia, and more money will be flowing towards BBTC and margin of. So that today at where it is today is like deep value plus margin of safety. Holding companies might becomes one of the hot choices of DIs and HNIs to safeguard their capital using the margin of safety model. And that is the reason why I have chosen these two, BBTC and Kalyani. And when I'm talking about Kalyani, when I'm betting on Kalyani, I'm betting on Bharat Forge. And we have seen a significant change in defense. And Bharat Forge is one of the prominent player in defense equipment and defense play. And we have seen more than means triple digit growth in defense exports. So that mega trend had just started. So if I'm directly betting on defense, because it has nothing to do with recession, it has nothing to do with all. Ultimately, government has to spend on defense and all. So these two bets, Britannia and Bharat Forge, comes to my mind when I'm talking about uncertain time. And let me just share, as I'm sharing this only purely for educational purpose. You must do your own homework before taking any decision. So this was my take on BBTC and Kalyani and holding theme as a whole, how it can provide us low risk, high uncertainty, low risk, high return framework with margin of safety, with deep value, without worrying much about the prices. So this comes to an end to this today's session. So thank you for attending this session. Don't forget to follow us on our social media handles for the dose of knowledge, wisdom, and ideas. We are available on Facebook, YouTube, Instagram, Twitter, and most importantly, the blog. I've been writing the blogs for the past 5 years now. More such insightful posts. I'm doing it on Strategic Alpha blog. Apart from that, I regularly take workshops, which I call it as TechnoValue investing workshop, usually on Sundays. So you'll be getting the link of the workshop in the description below. You can subscribe to it. You can just register to it, and you'll be getting a lot of understanding of technicals, fundamentals, value, and trigger. Because technical fundamentals will tell you what to buy, what to sell. Technicals will tell you when to buy, when to sell, when to reduce, when to increase. Value will tell you how much to buy and how much to sell. And triggers will help you prioritize between the bets. So that's why I say TechnoValue investing is a holistic investing process. And I'll be taking that special workshop and do register for that workshop. Link will be given in the description below.